What's going on, everybody? Welcome back to Crypto Coin King, the only crypto channel that doesn't try to sell you anything. In today's video, we are gonna do something a bit different from the usual. Instead of talking about certain projects or coins, I will go over the top 5 lessons I have learned trading crypto over the years, and most importantly, which mistakes to avoid at all costs. Quickly before we start, if you're a crypto enthusiast and investor, consider subscribing. We are releasing a new crypto video every 3 days. On this channel, you will always find projects and coins we truly believe in, but most importantly, there will always be fundamental reasons behind every choice. Let's get right into it. In today's video, we will go through a lot of information, so if you have any questions, comment down below and I'll make sure to get back to every single one of you. So lesson number 1, don't underestimate the other guy's greed. No, not really. Well, we will get to that greed part a bit later in the video, but lesson number 1 is actually patience. If you're looking at this whole crypto thing as getting rich overnight scheme, more often than not you will do the wrong decisions and that will end up costing you a lot. In this space, you just have to have the patience and you need to understand that crypto hasn't been around for long. It's only been around since 2009, 2010, so it's still kind of new and there's a lot of interesting and unpredictable things happening all the time. Just like everything in life, to become specialized in something, you need to put in the hours and work to learn and become really good at it. Even then, there are a lot of things not in your hand, but surely patience more often pays out than not. Take your time, it's not gonna be days or weeks. Take that idea out of your head. Usually it will take years of hard work and dedication and several failures. But most importantly, whenever you fail or lose in some trades, to stand back up, learn from your mistakes, and move on. Also analyze your trades whether they are winning or losing, and try to understand why you got the outcome in each of those trades, whether you made profits or losses. Having a trading journal definitely is worth it. Basically, you need to be able to view this from a long term perspective rather than a quick flip on your buck. Also, the fundamentals are completely different in the stock market or forex market, which is quite established, as you know, like traditional finance, whereas crypto is quite new and not everything is still clear at these stages. And as you know, it can get hectic and super volatile at times. As for lesson 2, a huge mistake I see a lot of investors do is trying to use leverage. So, this is pretty much a bad strategy for all new beginners. It can work for advanced traders, but if you're new to crypto and don't have at least few trading years of experience, then you should stay away from trading with leverage. So, leverage is basically using borrowed money to trade cryptocurrency that you need to pay back on top of interest on that money borrowed. So, let's take an example. You have $1,000 you want to invest in crypto. You can either straight up buy the crypto, and the only risk you are taking on is how much the price of the crypto is going up or down by. The other way would be using leverage. If a crypto is worth $100 per coin, you would be able to buy 10 of those normally. However, if you take leverage of 10, you can own 100 coins instead of 10. However, that also means you have 10 times more exposure, which basically means you have 10 times more risk. If the price of the crypto jumps by 10%, you double your money, that's true. But also, if it goes down by 10%, you lose all your money you have as collateral for that 10x leverage in this case. The issue with this is cryptocurrencies are very volatile and it's hard to predict in the short intervals because they normally trade sideways, and with using high leverage, there is much higher risk of losing your invested money. I have a friend actually that made quite a bit of money trading with leverage while the market was pumping really hard at the beginning of this year, but the more wins he made, the higher the risk he started taking, and ended up losing all his winnings and his initial investment on top of that. So yeah, big lesson here guys. Do not let greed control your trades. Number 3 is finding like-minded people to go on this journey with. Just like when you go to the gym, usually it's better to have a gym buddy who you can train and stay motivated with. Also, in some cases, you might be doing some exercises incorrectly and you wouldn't know unless someone points it out for you. The same goes for crypto trading. You might think you enter the market by yourself and tackle it on your own, and that sometimes can be true. At the end of the day, you are the one trading and taking the decisions on which the trades to make and execute, and you won't have someone next to you all the time. But it is highly recommended, and it's quite good to have a community around you with like minded people who can share and discuss information with you, like us at CryptoCoin King, for example. It doesn't matter where you meet those people, it can be a family member or a friend, any person with interest in cryptocurrency too, and looking to join you on this journey. Get involved in the community, ask questions if there's things that are not clear, and you'll always find the answers if you look for them. Reddit and Twitter are both good sources too. Sometimes, even if you have a view on some project or coin or whatever, it's good to have that extra confirmation from the community about things you already knew. And sometimes it opens your eyes to things that you didn't know about as well. So, lesson number 4, it's normally better to go with the trend instead of taking positions against it. Even if you don't believe in the trend, it's better to kind of sit on the side and view the action without taking positions there. If you're in doubt about a trade, zoom out and look at the big picture instead. When you are new to cryptocurrency, it's easy to get caught in that 5-minute charts. Instead, look at the 4-hour chart, 1 day, and some cases even 1 month. Cryptocurrency is different for forex and stock market and can be very volatile in short periods, so always better to look at trades from a long-term perspective. And the last one on our list is capital management. This is one of the main ones for sure. Usually people who are new to crypto trading always ask, how much should I invest in cryptocurrency? And the answer usually is, don't invest more than you're willing to lose. And obviously that differs from one person to another, and only you are able to know how much you're willing to lose without losing sleep over it. As a general rule, if you are losing sleep over it, you probably have bigger positions than you should have. Most definitely, it's better to look at this from a percentage perspective when discussing this part, because it's relative for each person and his circumstances. But 15 to 20% of your monthly saving after paying for your basic expenses sounds like a fair figure to me. You can never predict the market 100%, but at some point you will start to have a feeling if things are overbought or oversold. And as we spoke about earlier, stay away from leveraged products, as crypto is volatile and price can change 20 to 30% even in a matter of hours. Dollar cost averaging is crucial for how things work in cryptocurrency. Basically, instead of investing all your money at once in a coin, you do it over a set time period at different cost per coin. So you can see in this picture here, this guy was able to generate 20% more by doing so.